Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Boy, the appointments, John, are coming fast and furious from the Trump group here in terms of his appointments to his cabinet, naming some, I guess, czar is the term for some of these people, but he's certainly wasting no time this time around to setting things up for his team. And if you want to get the inside skinny on kind of what's happening with the Trump group, Mr. Trump himself, President-elect Trump, Tim O'Brien's the best guy. Right? I mean, he's senior executive editor, Bloomberg Opinion. He has a very long history with Donald Trump. You can Google that and see the history there, so he knows what he's talking about. Tim, President-elect Trump has been very busy over the last 3 or 4 days filling out his cabinet. What's your takeaway? Because there's some unusual choices.
Well, you know, the thinking had been during his first visit in the White House that he had this mix of advisors. There were people there who were loyalists. There were people there who were public servants who wanted to just fill important roles, people like Mattis, for example. Mm-hmm. And then there were other people who were like hangers-on and in there running their own agenda. But it was a mixed bag. And I think from his view, I think he walked away from his first experience in the Oval Office feeling like not everybody was on board with his agenda. He wasn't sure everyone was loyal to him. And the thinking was coming into this round, he would appoint more loyalists and people who were more deft at sort of manipulating the wheels of government in order to help him push his agenda through. And I think what you've found in this recent spurt of appointments is you certainly have loyalists, there's no doubt. But whether or not they're competent is another matter. And they're certainly controversial. Matt Gaetz is sort of front and center as an exhibit of, he's been named Attorney General. He's someone who has been under investigation by the FBI and the DOJ for sex trafficking, by the House Ethics Committee for a similar range of charges. He is the most unlikely person imaginable for a role like this. Republicans came out strongly against him. Susan Collins said she was shocked by it. He has to go through the vetting process with the Senate, so he may not make it through. But he's not necessarily someone you would put in the Justice Department because he is technically proficient. On the other hand, Marco Rubio got appointed to be Secretary of State. He has very strong national security credentials. Mm-hmm. He's got a diplomatic experience. He is a serious person for a role like this. And so, this array of people, Kristi Noem at Homeland Security, Tulsi Gabbard at DNI, neither of them have any experience that would recommend them to those jobs, particularly management or subject expertise. But the common thread binding all of these people is loyalty to Trump.
Now, Congress, of course, is now Republican-controlled or will be under President Trump. Does anybody there, can they still get through the process do they still face hurdles in the process?
Yes, I think they do. And I think, the interesting sort of barometer of that was the battle to be Senate Majority Leader. There was a lot of push from the MAGA wing of the party to have Rick Scott appointed as Majority Leader. And it ended up being John Thune. Senator John Thune. And I think he represents the wing of the Senate that prizes the institutional independence of the Senate and the role it plays as a check on presidential power. And there was a big push from Tucker Carlson and that wing of people, you have to name Rick Scott. The Senate asserted itself, John Thune is in there. And I think some of the commentary you got from Republican members of the Senate yesterday about Matt Gaetz's appointment, they all said he's still got to get through the nomination process. And so I do think you're going to see some of that.
Tracy Alloway from Bloomberg News just mentioned from some of her sources that maybe one of the strategies of nominating Matt Gaetz is it will allow President-elect Trump to see who's with him and who's not with him in the Senate by just looking at the votes, since it's going to be public votes. That kind of makes some sense to me.
It does, and he may get a lesson that even though he got elected president by a healthy margin, not everyone in his party is 100% with him on his agenda, even within his own party. The other way to interpret what might be going on with Gaetz is just sort of a sacrificial lamb. And Trump will put him in there, it will soften the Senate up, and then he'll come back with someone else who may be even more extreme or more capable, or however you want to define it, which is has been a Supreme Court nominee strategy at different times in the past.
There was a movie years ago, I don't know if you remember it, with Albert Brooks, Broadcast News.
Yeah,
And
sure.
there was a great scene in there where he's talking about his rival. I think he's the devil. Not really, but, nobody's going to follow somebody with horns who goes, ah. He says, just little by little, that person is somebody who's going to lower our standards. Where are our standards right now with these nominees?
Well, they're Donald Trump standards right now. And I think the moment that we're in now is where is that balance between the thing he wants as an individual and what our institutions and our laws and our democracy needs in a nonpartisan way to simply function in a healthy and constructive way. And I think it's really, the Republicans control Congress now. Trump has a trifecta. He has an unusual amount of power. And I think it's really going to be on the members of his own party to check his behavior for the time being. If it goes beyond that, it may go to the courts. But right now, it's really in Congress's hands, and we'll have to see. I don't have a crystal ball, so I'm not sure how that's going to play out. I do think there's going to be pushback against Gates, for example. I think there will be pushback against Kristi Noem. I think there will be pushback against Tulsi Gabbard. She has no intelligence experience. She was a member of the Hawaiian National Guard. And the thing to remember, though, is Trump thinks cinematically about himself. And he likes surrounding himself with people as he has always said, look like they're out of central casting. And they look like they play the part. Square chins, flowing locks. They look good on the poster. That doesn't necessarily mean they're good at management. As we all know from many organizations we've been in over the years, good-looking people often, that doesn't equate with great management or great expertise.
We were talking about Elon Musk before, and I think you mentioned in your column, is he taking too much attention away from Donald Trump, and how's that going to play out?
Well, that's a really interesting observation, because it's interesting to watch J.D. Vance, I think, who has very much presented himself as the number two, following Mr. Trump's lead. He phrases everything that way. Elon is a force of nature and loves the spotlight as much as Trump does. And historically, Trump doesn't share the spotlight very long with anyone. You may remember in the first term, I don't know how many weeks, and I think it was weeks after Steve Bannon appeared on the cover of Time magazine as, the sort of wise man puppeteer guiding Trump along, and boom, in short order, he was gone. Trump understands the value of having Elon Musk, the world's richest man, with him. That was a big factor, I think, in how his candidacy was perceived. Ultra male, ultra successful, ultra capable, and Trump likes to live in that glow. But the second people start saying that Elon Musk is telling Donald Trump what to do, Elon is probably going to have to pack up and go back to Austin.
Is President-elect Trump, is he a lame duck president today?
Why do you ask that? That's an interesting question. What suggests that to you?
I mean,
I would say no, but I don't know.
Well, I kind of feel like he can't run for another term. So I kind of feel like, unless he repeals the 22nd Amendment.
Well.
Okay, but maybe you can factor that in.
Yeah.
But if I'm a senator, I'm like, do I have to really worry about this guy? I know it's 4 years, but it's just 4 years.
Yeah, I mean, I do think there's a strong faction in the Senate they are traditional conservative Republicans. They are not MAGA, and they're worried about the own future of the party, its character, what it stands for, what kind of a force it is in U.S. politics. And I think they see Trump as a useful, blunt force to win an election, to dismantle parts of the administrative state, bring taxes down, revisit some other Republican policies that are familiar from over the years. And while also dispensing with all of the cartoonish, buffoonish, and dangerous things Trump also likes to stick his feet in more often than not.
In the election, sort of the postmortem, one aspect I was thinking, did people go into the polls and say, I can vote, number one, on the economy, and number two, there's a state ballot initiative on reproductive rights, and I can vote on that separate, keep those two things separate. Is that kind of what happened in some cases?
Well, I certainly think that was true with white women.
Yeah.
The three cohorts that you see in the exit polls, and we got to wait for more data to come in. These are not highly exact. But I think Trump moved up like 4 or 5 percentage points with white women between 2016 and 2024. He moved up something like, I think, 8 points with black men. And with Latino men, it was more than 20 points. And with Latino women, it was substantial. I think Latino men, there's a huge Catholic cohort there. They are anti-abortion. I think that informed their vote. I think, what you're asking, Michael, about the splitting the abortion ballot, I do think there was a number of women who were turned off by Trump's history as a sexual predator. He had been convicted of sexual assault, were found liable for sexual assault. And it was anti-abortion, but they felt they were traditional Republicans and they wanted to stay in the party. And ballot measures gave them the ability to split their vote.
Yep, fascinating days we live in here. Again, President-elect Trump nominating or putting up a lot of folks to fill out his cabinet. So we'll see how that plays out over the next couple of days. Tim O'Brien, Senior Executive Editor for Bloomberg Opinion.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, we got John Tucker here in for Alex Steele. I'm Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. YouTube.com. Just search Bloomberg Podcast, and that's where you'll find us. That's where the advertisers are going. Advertisers are going to advertise digital media. Think Facebook, think Google, think even YouTube is huge business in terms of advertising spend. And we're there, which is a good thing. So
I'm just dying to know what counts as innovation in the ad space these days. Is the short-term videos, the videos that I see?
I think that better targeting. That's kind of always the holy grail. So you want somebody advertising grills to a guy like you, right? You're the grill guy, and you're
grill
like the
guys
do-it-yourself guy,
or videos where the most effective for me, the things that I'm interested, like woodworking, where it's a show and they're using a piece of equipment and giving it the run-through, and I'm like, you know what? I gotta have that.
Gotta have that. That's how it works. Mark Douglas, President and CEO of MNTN. He joins us from Miami via Zoom thing. Hey, Mark, we actually had a really interesting data point on the global media, global advertising space last night with Disney. Their streaming business is turning profitable and like really profitable. What'd you take away from the Disney numbers?
Well, I'm not surprised. I think what you're seeing happen is the second half of 2024 and now going into 2025, essentially all of the streaming networks have largely reached the tipping point of being like streaming first. Like that's where all their sales effort is focused. They're focused in advertising, as you guys were mentioning, the innovation and things like that. And I think Disney is right there at the head of that pack, really focusing their business on streaming, and advertisers are responding, and basically the growth and profitability that's resulting from it is a direct result of that. So they're at the head of the pack right now in terms of that kind of growth.
Mark, are they hanging on to linear TV to satisfy old people like me?
Yeah, I mean, obviously they still own the assets, but every conversation I have with every streaming network, they just want to talk about streaming. I think they see linear is obviously it's a revenue stream for it, but it's not the meetings they're having as to how do they better monetize linear. It's all about, audience first, which, what we're talking AI to help identify the right consumers and making all of that available to brands and doing it on the biggest screen, on 55-inch screen, 65-inch screen, as opposed to your phone, which is like a 5.5-inch screen.
It's interesting. I was reading some research on the Walt Disney Company this morning from Laura Martin at Needham & Company. And what she does, and she says investors should think this way, is just kind of mush together the digital streaming business as with their linear, and what's going to happen over time is the digital business is going to become a bigger percentage of that streaming of that business, of the video business, and you're going to see the growth rates just accelerate over time as linear gets smaller and smaller. Who else out there, Mark, do you think is going to be a really viable player out there? I'm not sure everybody who's out there in the marketplace can survive here. How do you think it's going to shake out in the streaming wars?
Yeah, I mean, we've talked about this before. I mean, it's really easy to figure out who's going to survive and thrive, which is you just play a game where, one person names a network and another person tells you why they would go there and watch. So I say ESPN, you say sports. If I say Netflix, you would say, comedy, documentaries, new shows every Tuesday. If I say CBS, there's probably a pause in the conversation. It doesn't mean CBS is going to go away, but it's certainly going to be more challenging for them. And there are a number of networks like that. And so, I mean, the people with a brand with a clear reason to want to go and watch content there and be entertained there are going to thrive, and the others are going to be challenged and probably ultimately become part of some of those other brands. And I think in terms of the advertising, extend the question there, I think Netflix is, I don't think people fully realize how big a backlog they're building right now. So half of all new subs are for their cheapest package, which is ad supported, but they're not really serving that many ads relative to the number of subscribers. So they're building a huge revenue backlog that's going to get unlocked as they get as good as everyone else in monetizing. And I think that's going to, I'm super long on Netflix right now, meaning like if there was any stock I would want to invest in, it would be Netflix. And I'm not that far behind on Disney, although, Disney has parks and other things that make it a bit harder to, bet on the future.
Can you close out real quick? What is the state of the digital ad business right now from your perspective?
Yeah, it's very healthy. I think overall, the best part of digital advertising is the long tail, mid-size and small companies. That my own company, Mountain, that's what we focus on, is bringing those small, mid-size advertisers into the streaming television world for advertising for the first time. And I think all these streaming networks have really woken up to how that's an opportunity. I always like to say it's really easy. There are two ways to grow a business. You can grow the number of customers or the revenue per customer. And the TV industry for a lot of years did neither of those things. And so now I think they're waking up. They've woken up to, we need to grow the number of customers. And in streaming, there actually are some ways to grow the revenue per customer. So that's why I think it's, the media world is actually getting reinvigorated with growth right now.
Mark, thanks so much for joining us. Always appreciate getting a few minutes of your time. Mark Douglas, President and CEO of Mountain. He's based in California, but he's down in Miami. How come all the smart young folks are down in Miami, John? And they're not in Sheboygan. They're in Miami. They're in L.A.
And here we are stuck in a hermetically sealed booth with each other.
Exactly right. That's what the smart people do. Mike McGlone, they're all down in, I guess, Florida. That's where the smart kids are. John, thank you so much for sitting in today.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
John Tucker sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. John, Lisa was just talking about, some technicals on the S&P 500. So I type in S&P 500, SPX. Index, and then I hit RSI for Relative Strength Index. And it kind of says, it got a nice little chart there, and it shows you, when you're at an index level of 70, maybe it's a little overbought. And if it's down at 30, maybe a little bit oversold. We're sitting here at 64.5, and we bounced, or we came off of that 70 level just a few days ago. So from a technical perspective, maybe a little bit in the short term, a little bit expensive.
But also 23 times projected earnings at this point. Maybe that's
but
the
John,
focus.
If you pull out the Magnificent Seven, it's only 18 times. So, but let's see what the professionals are doing there. Margie Patel joins us. She's the senior portfolio manager at Allspring Global Investments. She's up there in Boston. Margie, you woke up a week ago today, a Republican in the White House, Republican in the Senate, and now we learned today Republican control of the House here. Your folks at Allspring, did you change your outlook at all for how you think about allocating capital?
No, I think we're still looking for continued economic growth, maybe more modest, say 1.5% to 2.5% in real growth. And we'll have to see if any of these plans that the Republicans have announced, how soon they will actually be enacted, how much of a positive they'll give to the real economy. The market's liked it so far, but we'll have to see. So we're leaning more towards modest growth, same themes as we've had all year.
Well, stocks don't operate in a bubble. How closely should we follow what's happening in the bond market as we look at equities?
Well, I think it's interesting because you've actually had the bond market looking at treasuries actually move up. You know, the Fed made a cut of 50 basis points in the funds rate. And instead of bringing yields down, we had the 10-year treasury actually go up by 65 basis points. Today, it's even higher, say around 4.4%. But I think with inflation, say 2.5% to 3%, I don't think a 4.5% yield on treasuries is really enough to be a negative or slow down economic growth. I think it's really a neutral factor. And maybe it says more, we have a huge supply of treasuries. And so that is really dragging down the relative relationships between, say, treasuries and stocks or high yield bonds or corporate bonds, making treasuries look relatively cheap just because there's too much supply.
Margie, in the equity side of the business here, if you believe the Republicans are going to be pro-growth, pro-economy, does that suggest that I can invest along those lines? Maybe think about more economically sensitive stocks, be it industrials or maybe even energy?
Yeah, and actually, industrials have been leading the market all year, which to me had been telegraphing that the market is not worried about economic growth, or you wouldn't have seen a sector like industrials, besides tech, be so strong. And we've actually seen energy look like it's finally got a little bit of life here, whether that's in reaction to growth or prospective new rules relating to U.S. exploration and development. We'll have to see. But I think those are continuations. Industrials are one of the best sectors year to date. They look like that's going to continue next year.
Is any of this priced in right now, like a proposed 15% corporate tax rate?
No, I just think that if you look at how much the market has moved since the election, maybe we really need a breather. Plus, we pretty much finished with third quarter earnings, which once again were pretty good. Say earnings were up, say average about 9%. So that certainly supports higher stock levels through the fourth quarter. And really, December is always a good month for stock. So it looks like we may have some short-term wobbling here and then have a strong finish to the year.
Fixed income's actually back in the green here, just broadly defined, Margie. And the best performing sector in fixed income has been U.S. corporate high yield, like really outperforming. Where do you see opportunities in the credit markets?
Well, that's been the trend. High yield was the best performer in 22 when the Fed began rates, 23, and so far year to date. And in fact, the yield spreads have actually narrowed as treasuries have backed up. So high yield bond prices have held firm, yields have held firm, while treasuries went up. So that's, for example, double Bs now yield less than 2 percentage points over the same maturity treasury. So that says to me the market is not worried about defaults. In fact, corporate defaults in high yield next year, 25, should probably be under 2%. So basically, you actually could see yield spreads narrow even from these historic narrow levels.
Well, what's the path ahead for the Fed? 25 at the December meeting and maybe a pause in January?
Well, that's what's priced in, but you can see it really, the Fed's actions at the margin haven't had a lot of influence on the equity markets, or frankly on the economy as a whole. The economy's chugged along. And so I don't think the market will react to another 25 basis point. It's pretty much baked in, I think, for the outlook. And then the Fed taking a pause.
Margie, thank you so much for joining us. Really appreciate it. Always getting a chance to chat with you. Margie Patel, she's a senior portfolio manager at Allspring Global Investments up there in Boston.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Our good friends Meta fined 798 million euros, 840 million US dollars, by the European Union over classified ads dominance. I look at the stock, unched on the day, no real change. It's up 60% year to date, so I'm kind of thinking it's not that big a deal, but let's go to an expert on that. Mandeep Singh, senior tech analyst for Bloomberg Intelligence, joins us here in our Bloomberg Interactive Broker studio because he remembers the way to New York City, unlike his managers. Mandeep, thank you so much for joining us here. What does it mean for Meta here?
I mean, this could be a harbinger of more fines simply because even though this particular fine is like 0.5% of their total revenue, so really not a big deal. But in the grand scheme of things, what the EU is doing is saying their Digital Markets Act, which really prevents the gatekeeper companies, and Meta is deemed as a gatekeeper along with Alphabet and Microsoft and Amazon and Apple, these companies can give preferential treatment to their services. So in this case, Meta was fined because they show you ads on Facebook Marketplace when people are browsing their social media platform. And one could argue, they do it because they have this marketplace, it fits well, it improves the user experience, but clearly EU doesn't want that to happen, especially with these gatekeeper platforms. And the same logic applies, with Apple giving preference to their Safari browser or their maps, or Alphabet giving preference to their maps or flights product. So that's the kind of really the focus that EU regulations have when it comes to these gatekeeper companies, and we'll probably see more fines in our view.
How many regulatory speed bumps are there out there for the digital ad business? It just seems to generate all this work for regulators.
There are two ways to look at it. One is clearly there are, so many kind of regulations that are focused on these companies, the ad businesses that generates, $150 billion plus in the case of Meta, in the case of Alphabet, over $200 billion. So clearly the focus is on the scale here. But the other side of it is it actually prevents more competition. Because why would an Oracle or some other tech company get into an ads business where you are at the risk of paying over $1 billion fines? Like, it's just not worth it anymore, because of the scale of fines. $840 million, it's a lot of money, but it's not a lot for a company that's generating over $150 billion in revenue. So that's where I do think it has an unintended consequence in terms of limiting competition. But at the same time, it's very clear what the EU wants to do is they want more third-party products. Apple can't just say you have to use Safari browser. They want more choice screens. So that's the same concept that's applicable to all these gatekeeper companies.
I don't know. I was back in the day when Microsoft was getting fined by the European Union 25 years ago. How did that work out? Microsoft's a beast.
Yeah, well, all these companies have to make some remedies. That's what Microsoft did. Yep. Is you can't just bundle, Internet Explorer with everything and be able to get away with it. So I think there are some things that they can do on their own, but clearly when it comes to paying these fines, and the fines could range anywhere from low single digit to high single digit of their global revenue. So in the case of Meta, the fines could be as big as $10 billion. I wouldn't be surprised if it keeps happening and EU thinks they're not in compliance. We're talking about potentially a $10 billion fine here.
The regulatory lineup is changing in Europe, right? The faces, and in the United States, does it matter that might be going toward regulatory light?
I don't know for Meta and Alphabet, it'll be regulatory light, given a lot of these antitrust cases were started in Trump's first term. So, and there is no indication whatsoever that says, these companies are likely to get away with it. We know the stance of Vice President-elect J.D. Vance in terms of what he thinks about the big tech companies. So I don't think the regulatory scrutiny is going away anytime soon.
But here's the big wild card, I think, which is Elon Musk. We had Dan Ives on from Wedbush Securities on, and he says, as it relates to electric vehicles, he thinks this could really accelerate electric vehicles adoption. But it's, the conflict of interest, who knows? They'll figure it out, I guess. But he could be positive for big tech.
It could be. I think on the electric vehicle side or robo-taxis, probably lesser regulation. But when it comes to these giant ad businesses, I think that's where every regulator kind of agrees upon the fact that these companies have too much power when it comes to the ad revenue and the dollars they generate.
I know this is just tangential, but Tim O'Brien's coming up, and I want to ask him that question about Elon Musk.
Yeah.
Elon generates right now a little more attention than his good buddy, the president-elect. And you got to wonder how that's going to play into the dynamics going forward. Yeah,
that's going to be amazing. What are the tech have the tech companies said anything about this election here? Have we heard anything from the Tim Cooks of the world or anybody else there about this election?
I think, again, our view is out of the Mag 7, probably Alphabet and Meta will have to contend with more scrutiny than the rest of the Mag 7, simply because I think Apple has done a good job when it comes to building the relationship with Trump and Amazon as well. So in this case, clearly, you're going to see more pressure on Alphabet and Meta.
What's the big story that you're following right now? What really captures your attention in this space?
Look, when it comes to the Trump administration, tariffs is a big deal. What sort of export restrictions will come into play given everyone is so focused on AI, and what impact does that have on the development and the pace of AI? That, to me, is the biggest thing out there.
Mandeep Singh, one of the best. We appreciate it. Mandeep Singh, he's a senior technology analyst. He kind of runs all of our technology research on a global scale because technology is a global business. Obviously, Asia is a huge part of that, and we have a big team in Asia covering the companies there. We've got folks in Europe as well, but it's kind of run right out of here from New York with Mandeep Singh, Anurag Rana doing it all. And so technology, big issue here. Again, Meta, fined by the European Union, 798 million euros, about 840 million US dollars, over the classified ads dominance that it has. So we'll have to see how these companies navigate it.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, we got John Tucker sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you find us. Joe Weisenthal, Tracy Alloway, Odd Lots podcast hosts. They're in our studio. John, we usually talk with Joe and Tracy. Big, weighty issues. Today,
well, this is big and weighty.
This could be big and weighty. Chickens. The chicken industry. Do you think of the chicken industry often, John?
I love chicken.
I love chicken.
Everyone loves chicken. It's so good.
Who doesn't? But
I get the chicken roasters at the food town.
Do you?
Oh, delicious.
There you go.
But you know what? It ain't cheap.
It ain't cheap. It's a big business behind there. Tracy, Joe, thanks so much for joining us here in our studio. Tracy, talk to us about how you guys look at the U.S. economy through the medium of chicken.
Yeah, that's right. So we're releasing a 3-part series called Beak Capitalism, and it's all about chicken and what it says about the structure and nature of the U.S. economy and things like consumer demand and inflation, also the labor market and how we structure that, and then finally how we think about the power of companies more broadly. And the weird thing about this series is, I guess it sounds a little bit random for us to be doing a whole thing on chicken, but like 80% of the guests that we have on in this series have already been on Odd Lots before talking. So it seemed like a natural fit for us to do.
There's so much there in terms of looking at one thing that people consume in myriad ways, chicken, and then going back and figuring out how many interesting, I guess I would say macro questions that you can start to pick at from just looking at how you get from an egg to a bird. So, there's the question of just how pricing power works at the retail level. There's obviously, as Tracy was talking about, market competition and the degree to which a handful of large, massive poultry companies are this huge, dominant player in the supply chain. There's labor issues, which is, we think of like Uber and we think about gig workers. A lot of chicken is essentially grown the same way. Technically independent contractors growing birds in their own farms, et cetera. There's the pandemic and the health-related issues when thinking about bird flu and the effect that had on egg prices, which were so salient. And then egg prices had a effect on how people perceived inflation. So there's almost no topic in the U.S. economy over the last several years that on some level can't be understood by this one specific supply chain.
And it's not that the small producers were taken over by the big guys. They just couldn't afford to compete alone anymore.
Yeah, what it is, it's actually really interesting, the chicken labor market. So you have these sort of small scale chicken producers, but they're all contracted out to big, they call them integrators. So think about companies like Tyson or Purdue. And Tyson will give you the baby chicks, then you are responsible for raising them. But Tyson also gives you the food, they give you the medicines, they tell you exactly how you have to raise your chickens, but you as the farmer are taking on basically all the risk of actually doing that. So if Tyson says, we want a better barn for those chickens, you have to build it. And that's pretty costly. And it kind of fits into a broader criticism of the economy right now, which is we have these really large, powerful companies that are dictating terms, not just on the pricing side, but potentially on the labor side as well. And we also have more and more money being made by intermediaries. And we spoke to one person from the DOJ. She calls it the tyranny of the intermediary in this economy.
I'm looking at Tyson's, the stock. This is a big company. It's $23 billion of market cap nearly. Stock's up 18% year to date. Joe, is the chicken business a good business?
Yeah. I mean, so you look at Tyson, but, look at a stock like Wingstop.
Okay.
And I don't know what it's done over the last few months. I haven't pulled it up in a while. But, I mean, that's one of the most extraordinary long-term stocks you'll see on the market. It's a fantastic business. One of the things that we get into as well on this episode is, the McNugget, right? It's just this like chunk. They're delicious. There are various versions of some sort of part of the chicken meat, then deep fried. Everybody loves it in sandwiches. But this is the emergence of an industrial process that emerged over time, right? Because at some point, as chickens were grown in the backyard and the meat wasn't really that good, etc. And then science came to the rescue, made the birds bigger, made them fatter, made them juicier, made them tastier. It found ways to process that meat such that we can get a chicken tender or a chicken finger or a McNugget, etc. So there's also this sort of long-term march of science story as the chicken has become a more wonderful food to eat in various forms and flavors.
Real quick, Trace, I thought we had regulators who watched over this thing and made sure there's competition, especially that the small business owner guy raising chickens wasn't going to get crushed.
That's an excellent point. They've done some stuff. So they have done some things to sort of crack down on the integrators and the terms that they can dictate to small-scale farmers. So for instance, if you are a small-scale farmer and you want to switch your integrator, you want to work with another big company, they used to punish you. They could penalize you for doing that, charge you money. The DOJ has cracked down on that. But, there's clearly a lot more to do here. And it's interesting, one of the approaches the DOJ is taking now, again, going back to that intermediary point, they're not necessarily looking at Tyson and Purdue, although they tried previously, but they're looking at a company like AgroStats. Have you ever heard of that one?
Never, but I'm sure it controls my life in some
way.
Yeah.
Yes, it's a pricing database for groceries, basically. So if you are selling a grocery product, this company will tell you what it thinks you can sell that for. And you can guess what effect that has on the market. So there's currently a suit going through on AgroStats.
All right, Tracy, great stuff. Great story. Tracy Alloway, Joe Weisenthal, Odd Lots podcast host, joining us here in our Bloomberg Interactive Broker. They've got a 3-part podcast coming out. Beak, B-E-A-K, Beak Capitalism, talking about looking at some of the issues in the U.S. economy through the medium of chicken. And who doesn't like a good chicken sandwich?
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.